Good morning, good afternoon, good evening. Welcome back for another video. In today's video, I obviously want to follow up to some of the alarmist videos I made last week and just given some kind of analysis as to where we are going and how bullish or bearish this is for Bitcoin. Primary thing that I want to look at is in regards to the Federal Reserve. What are they going to do with rates, and what are they going to do with their balance sheet, which is just it's really frustrating right now. But hey, if you like this content, obviously I would love it if you would smash up that like button, subscribe to the channel, and leave a comment in the comment section. So as a means of following up to my Thursday video, you can see here the Fed added another $100 billion or so, actually $1.1 billion to their balance sheet. I was very nervous that we were going to see a new all-time high in the Fed's balance sheet after that $300 million week last week. But nope, just or 300 billion, excuse me. No, not mil. I wish it was 300 million. $300 billion last week. Maybe that we were going to see another $300 billion week and get up to a new all-time high, over $9 trillion in the Fed's balance sheet. But hey, let's celebrate. There was only $100 billion added. So what does that mean? That means we just need to, we're going to see how this plays out over time. You can't really make any assessments off of 2 weeks of additions, but $400 billion added to their balance sheet in 2 weeks is very alarming, considering the fact that it took them a year to unwind $600 billion. And so here's the first thing I want to say about all of this. I have seen estimates ranging from $2 trillion, which seems very unlikely that they would only add $2 trillion to the balance sheet, but I've seen estimates as high as $18 trillion. And so this is our playing field. This is what we've got to work with. If it's $2 trillion, maybe things aren't going to be as bad as suspected, but I am skeptical in two regards. I think that what we have ahead of us, there's a timeline to it, but what we have ahead of us is going to end up being worse than the 2008 financial crisis, maybe on par with the Great Depression. We'll see about that. Worse than '08, I would assume. And so if that's the case, 2 trillion just isn't that 2 trillion wouldn't come close. It would be many more trillions added. If it's $18 trillion, oh my goodness, inflation to levels we've never seen before. Never in the United States history. Never have we seen inflation at that. If the Fed put $18 trillion to this, we are seeing maybe not hyperinflation. I'm not sure if I want to commit to that, but very strong, very high inflation, and Bitcoin reaching new highs, gold for sure reaching new highs. And so it is a week by week thing. Listen, and I want to be clear about this because I remember one comment on my last video, somebody was like, what do we do? Kind of like really scared. And we do have some time. And I want to lay out some kind of a timeline in this video. We do have some time. But time goes by quickly. And so I want to be prepared now. So here's I kind of want to lay out, take this with a massive grain of salt. Things can change dramatically at the turn of a dime, but I want to lay out some kind of a timeline as to what I'm thinking of. And the first thing that I want to point out is just remember, right now, inflation is going down. I mean, if you remember in 2020, interest rates went to zero. The Fed doubled their balance sheet, and quantitative easing, all that stuff. It was a great time to be a bull, short term at least. But 2020, it took some time for inflation to start entering the economy. And I mean, if you were to look at historically the CPI reports, what you'd find is that in all of 2020, inflation wasn't really that bad. But once we got into 2021, that's when you started hearing words like transitory inflation. And by the end of 2021, it was clear that inflation was not transitory, that it was actually getting out of control. But that was about a year and a half after COVID started, And so it could be something similar this time around soon. Interest rates, yes. Inflation is going down short term. And that's going to continue. And it might actually be a falling knife. I mean, it could be one of these things where we get to 2% and then we shoot way below that, even maybe even below zero, but then boom, V-shaped recovery with inflation, which is not a good thing. And so that could be in the cards. But inflation, next CPI report is going to be lower. The CPI report after that is most likely going to be lower. After that, whatever. I think we're going to see several months of decreasing inflation. It just depends on where we bottom, but I think we're going to jackknife pretty hard after that. So here's what we're looking at over the next several months when it comes to the federal funds rate. CME FedWatch tool, this has been hitting things on the head. What we're seeing right now is a 58.5% chance of a pause when it comes to whether they're going to raise interest rates. So 58.5% compared to 41.5 for raising another 25 basis points. I think they're going to pause, but we still have something like 36 days. Yeah, 36 days, 37 days from when I'm making this video. In June of 2023, we see a 57.2% chance that we're going to be at our current, as of right now, as of today, our current rate again. And so as of right now, there is an estimate that we are going to be paused for 2 months. Now, going to July, what we're going to see here, July 26th, is that the most likely thing that could be on the table would be a decrease by 25 basis points. So that is what the market has priced in. But let me fast forward to December of 2023 just to see what is most likely. We have most likely a lowering of 75 basis points from where we are now. Second most likely, so 2 and 3 chance that we would see something between a 50 and 75 basis point decrease. The Fed is going to, remember, the Fed always thinks short term about these things, and so they're going to think short term, and because that's what they always do. And they're not idiots. I just, maybe they're on the wrong foundation or something, but they're going to see the federal funds rate be higher than inflation, and they're going to see inflation come down, and they're going to, in their minds at least, think, hey, there's plenty of room to lower rates. And so that's what they're going to do. They're going to lower rates sometime. Maybe July is going to be the first time they lower rates. We'll see about that. What we're seeing right now is an estimate that they will have lowered rates by 50 to 75 basis points by December of this year. We will see about that, but here's the thing I want to remind you. I've been saying this for well over a year now. When the Fed starts lowering rates, that is when we see a recession. This has happened historically for the last 50 years. They'll raise rates, they'll pause. When they start lowering rates shortly after that, we enter a recession. That's what happened in 2008. That's what would have happened in 2020 if it wasn't for just COVID coming and the Fed deciding to lower rates all the way down to zero. We would have entered a recession. We did enter a very brief recession. This time around, it's not going to be any different. Shortly after the Fed starts lowering rates, and I would say maybe even this year, if not, very little doubt it's going to be 2024, we're going to enter a recession. And so is that the big one is the question. On the West Coast there's always the fears of the big one, the big earthquake. And is that the big one where the Fed responds then by lowering rates to zero because it's just this, it's Armageddon, it's this major catastrophe? Honestly, my guess, and very open-handed, remember, I don't think that that's going to be the big one, that we will see another period of rates down to zero, of quantitative easing, of massive additions to the balance sheet, continued additions to the balance sheet. And then after that, inflation going well beyond 9%, the peak of this previous time around, and double digits. And then after that will be the big one. So what's the time frame for that? Who knows? I mean, we could still be anticipating that in 2025, maybe even 2026, honestly. But man, I want to be clear. It is scary right now. I was clear about that on my Thursday video, my Wednesday video. It's very scary right now. I'm paying attention to, well, where is inflation going right now? Well, it's going down. And so then what? Well, the Fed's going to continue to add to their balance sheet. That's going to prop us up a little bit before the big one. Who knows? But that's just my general thought. But, constantly be paying attention to this channel, that I don't think the big one is happening in 2023 or 2024, but what I consider whatever is happening soon, yes. I think soon. The big one could happen in 2024. I think soon, because I think of 2 years as very soon. 2 years being the amount of time that I have to stockpile my Bitcoin, my gold, a little bit of gold, to stockpile non-perishable groceries, and to start a garden and build a chicken coop and get rabbits. I'm serious about that. I will be doing those things within the next 2 years. So it is what it is. The big one used to be something that I would picture happening in the medium-term future, but I would say it's near. And so you got to be ready. Not financial advice, I suppose. You will be stupid if you're not ready. You'll be foolish. Looking at Bitcoin short term, I did talk about in I believe it was my Monday video, that things were overheated and it looked like we needed some time to cool off. Looking at stochastic and looking at the price action, it shouldn't be a surprise that we are at $27,000. Now, I do think we have a little bit lower to go. My worst case scenario would be right around here. Excuse me, I feel like I'm about to burp, but $25,200 or so. Do I believe that we're getting there? Honestly, I don't think we're going to go that low before another retest of the 28.5 level and a breakthrough. I do want to remind you that these levels were drawn in January. And so all this interaction that you're seeing here, that was just, those are the levels. That's what traders look for. And so always stick to the levels. There is a lot of volume. There's a decent amount of volume in that mid 26 range. It's like the middle of the range between obviously these two ranges here. I think there's going to be a lot of support there. And that would be my assumption as to where we're going to hold and not go down to 25.2. I mean, there could be certainly be a wick, but I think ultimately we're going to hold this. I mean, look at that wick. That was a gnarly wick there, almost to $29,000, maybe even a little above $29,000 last week. Maybe that's the wick, but I think on a daily candle, we're gonna hold the mid 26 range and then retest this 28.5 range and break through there. I do still believe that we are, especially with this money that's entering the system, the liquidity that's entering, that we are still well on our way to this bear market rally to newer highs. Not new all-time highs, but I've been saying for months now, for 3 months now, that somewhere between $30,000 and $42,000. I'm sticking to that. While also keeping an eye on the Fed balance sheet. If we start seeing trillions of dollars injected into this, anything is on the table when it comes to Bitcoin and its price action. And I really do mean anything. I do mean in 2023 all-time highs. I'm still wrestling with that in my mind. I don't know how much short-term holders would let it get to that point regardless, but at the same time, if people start seeing a Federal Reserve that it's out of control when it comes to their own balance sheet, there may be a lot of fleeing going on towards Bitcoin and gold. Gold looks ready to pop off like crazy right now. I am seeing news, and I do want to talk about this, about Binance. So I'm seeing a lot of people saying that this recent price action, this dip to $27,000, can be pointed to Binance and the CFTC suing Binance. It came out of nowhere, just like when the CFTC sued Coinbase. And has that contributed to it? Yes, but at the same time, the timing it works out pretty interestingly, in the sense that we were due for a little bit of a cooling off. I mean, look at this candle right here on March 17th. That was quite wild. And of course, I mean, I did say once we broke through 25.2, once we convincingly broke through that $28,000, this mid $28,000 range was going to be the next range. It was going to go there quickly, and that's exactly what happened. But after that, really, you need some time to cool off. And so here we are in the cool off stage before, in my opinion, a retest and then a breakthrough at least to 31.8 or so. So anyway, Binance, yeah, sure, that has something to do with it. But I'm looking bigger picture and just seeing, hey, things got overbought. People are taking profits. Where are we going now? My guess is up short term. So that is all I have for today. I hope you enjoyed. I hope you. I'd love to hear your thoughts. I'm always looking to get refined by a lot of things that I see in the comment section. But love to hear your thoughts in the comment section of this video. And I hope you have a wonderful day, wonderful rest of your week. I will see you in the next video. Peace.